This is Scott Becker with the Becker Business and the Becker Private Equity Podcast. Today's discussion is the markets are rebounding today, plus 8 other stories and thoughts. We hope you enjoy this. First, the markets are up today, hopefully gaining back, rebounding most of what they lost yesterday. Yesterday, the 14th, a tough day in the markets. It looks like the 15th will be a much better day, at least so far. We'll see how it goes. It's a long day, so we'll see how it goes. But so far, so good. Second, BlackRock, the world's largest money management firm, now has $14 trillion in assets under management. It's amazing how BlackRock has continued to move in the right direction, while some of the huge private equity fund companies have slowed down some of their growth. Third, Rivian, electric vehicle maker, got crushed yesterday. 2 more analysts downgraded Rivian in the last week. It was down 7% yesterday. It's fascinating because Rivian's been up so much as of late. We find it fascinating to watch in part because it's been on such a tear. Now they're saying it's AI and autonomous vehicles aren't moving as quickly as expected, and that it's Rivian 2, its next big vehicle that's supposed to be coming online, that the expectations for it are overhyped. So again, the first 3 stories, markets rebounding today. BlackRock hits $14 trillion in assets under management, and Rivian down 7% yesterday. A few other thoughts today. The fourth concept they will talk about is weight and money. And I think this is probably endemic to most people, but it's certainly my experience that when I finally get closer to my target weight, I tend to let off the gas pedal and rebound back in the wrong direction. It's very similar to when the market is way up and I'm doing fine. I tend to at some point overspend and take my net worth back down a little bit. So I'm trying to deal with these 2 psychological barriers of getting to that target weight and then starting to eat a lot again, and getting to that target net worth and then starting to spend too much again. We'll try and figure those things out. Fifth, as the market goes up and down, there's just a daily reminder that essentially allocation is everything. How you allocate your assets is what allows you to do well when the market's going well, but also sleep at night when the market is struggling. So that's that thought for the day. The 6th thought for the day is there are people that cancel on you regularly, and at some point you need to get those people out of your life. It happened just today on a specific thing, and just a reminder that don't let people keep canceling on you. Move those people out of your life. This had to do with some kind of tennis thing, but it is what it is. 7th, and hard to explain to everybody, there are days where I wake up so wound up that I don't know what to do with myself. And to those around me, I apologize. 8th, I totally love X itself, Twitter, X, whatever you call it. However, it is crazy on X how some people say such racist and homophobic and anti-Semitic stuff. Now, I love free speech, but I tend to block those people. The stuff that gets said on the platform often blows my mind. The flip side is I'm a huge fan of the free speech that X engenders and allows. So you take the good with the bad, I guess. Finally, the last story that we're following today, and we talked about this in a separate podcast, is the more that we invest in private equity and venture capital funds, the less certain I am this set of investments is going to beat the index funds. The flip side, of course, is that I am very impressed with the steady hand in the business leadership and investment leadership of the funds that I do invest with. But overall, I've not hit the home run in investing in PE and VC funds that I thought I would years ago when I started to do so. Again, thank you for listening to the Becker Business and the Becker Private Equity Podcast. Thank you very much for joining us. This is Scott Becker. Feel free at any time to text Scott Becker with ideas, 773-766-5322. Thank you so much for listening.